Good morning. This is the seasonal stock and ETF report for today, September 28th, 2022. Okay, let's take a look. Walmart's on the top of the list like a fixture. It's been there for a while. However, the Sharpe ratio is now lower than it was last week, I believe, but it's still on the top with a substantial gain over the second best, which is Microsoft. Take a look at Microsoft. We're still slightly early for Microsoft. If you want to get Microsoft, it's probably better to do it in second or third week of October. There's a rise going all the way into first week of November, and then we see sideways. This is what's happened last 10 years. So this period doesn't seem to be great for Microsoft. So let's take a look at it like this. If we would have bought at this peak and sold here, look at that. This is a potential short opportunity. It won against the seasonals 2016, 17, and 19, but it's 70%, 7 out of 10 years. It lost money during this period, which is November 6th to January 13. How about last 20 years? Last 20 years, it actually made some money. Actually, no, it actually didn't make any money. This is a totally sideways random market, as we had discussed. Sideways markets are just not when you want to be in that stock. But look at Microsoft. Microsoft also tends to drop all the way down to here. This is the last 20 years. 55% of the time, the down was profitable, and you would have actually made money shorting Microsoft between November 6th and March 7th, last 20 years. If you would have shorted it last 20 years, you would have made 61.85% on your money. This is what the cumulative return would have looked like. My whole point is you're better off timing the market if you have this tool. Let's look at the uptrend on Microsoft here. Look at that. 80% of the time last 20 years. Microsoft's made money between March 7th and end of April. Average of almost 10%. That's much more like it. If you want to time the market, this is a good time. This is the other time that's a really good time to buy Microsoft, is right here. How about this? Another 80%er. This one is October 9th to November 6th. You would have made 10.5%. So we are too early for any bullish calls at this point. Everything we're seeing, for example, look at Walmart. We're still going down some before going up. So technically or theoretically, if we start the date here, Sharpe ratio actually dropped. Okay, let's look at, do we have shorts besides IBM? No, IBM is our only short opportunity. And as you can see, we've been talking, this is the time to get it. Although it's probably okay here too. See, the Sharpe ratio is increasing. This is the time to short IBM. Right around here, which is first week of October. I am going to short IBM, checking to see if this is going to continue. Average of 9.36% in 2018. It made almost 22% on the downside. Let's take a look at that year. It just dropped off a cliff that year. How about 2021? It went all the way to October 20th and then dropped off a cliff. May happen sooner this year. Who knows? But the seasonal tendencies for IBM are on the downside right now. Let's look at NASDAQ. Top of the list. Paychex has gone to the top of the list now. It wasn't on the top before. Yesterday at least. Keurig was. Average of 9% in 141 days until February 15. Why not here? That may be a better choice, although the Sharpe ratio drops because of the 2 bad years. I can improve the Sharpe ratio by killing that down to 9 years. Yeah, it's almost at 1. Keurig, number 2. Microsoft. Synopsys. All of these are better to wait a little, so let's look at shorts. This is the time to do shorts. No shorts as of today for NASDAQ. S&P. There are shorts on S&P. Abiomed. Williams and Chipotle are our current shorts. Oh, let's just go to Wilshire and look at shorts. Top of the list, Calrus. This is right before a major gain too. Take a look at this sharp rise. It's a $24 stock. Bulk shipping. What kind of stock is that? $42 stock. RRC. These are all lower price stocks. Here's Dick's Sporting Goods, $110 stock. Decent Sharpe ratio on the downside. Average profit of 4.43% in 1 month. What does this is the seasonal chart look like? So it has a major down move. What if we had done this? So if you were trying to write this at this peak, which is 19th of September, you would have had an almost a 1% gain on the downside. Okay, let's go look at ETFs. Top of the list, consumer staples, followed by dividend appreciation ETF Vanguard and S&P technology. These are all longs. What's top of the list for short? Top of the list for short is US Natural Gas Fund. It's still rising seasonally, and then it's going to drop sharply. What if we shorted it right there? Look at that. UNG drops between October 12th and January 8th 9 out of the last 10 years with an average profit of almost 20%. This is a pretty cool one. What else do we have? We also have silver, which is going against the trend. We'll start the start date earlier. See, this is going against the trend. This is because of inflation. During just basic economics is during inflation time, when interest rates rise, the value of cash increases. Value of money increases. Value of money increasing also increases technically the value of real money, which is gold and silver. So this is going against seasonals. At least that's my interpretation. Spider long-term treasury and physical silver, which is pretty much same as silver. Okay, this is it for today.